Well, hello, folks. I'm L.A. Little, and this is today's short take. As we roll into earnings season, one of the big things that's happening here is Apple. And Apple is, shall we say, lagging the market. And a lot of that has to do with, Chinese demand, iPhone demand, and so forth. If we look at all these markets and we're looking at the mean time to failure, they've all been stretched extreme on the long-term time frame. Usually when you get up to about 70-75%, you're pretty extreme. All these are up around 100 now, which means you can't go any farther. They can hang up here, but at some point they have to reset. How does the reset occur? Well, you got to get a break. By getting a break, what I'm saying is you have to break a swing point low on the way back down. And all these markets, or most of them, came back to test swing point lows on that decline in August. A reset would allow this market more opportunity to move higher again over the longer term, but you have to get a reset first. And so we tested with more volume, but what we were coming into had a lot more volume. That's why we bounced right back up. The ideal here is that we'll probably come back to retest and try to regenerate again off that swing point high, but we may actually close under that on a monthly basis, which would be the reset, which would allow us to see, this market come off these extreme levels. The other thing I'd note is volume has declined significantly over time in this stock. As you're pushing new highs, you typically don't want to see your volume declining over and over. So Apple, even though it's a great stock and everything about it is good and it's probably going to do okay into earnings this quarter, longer term there seems to be some sort of an issue here. And the reason to look at Apple is Apple's such a huge weighting in the S&P 500, in the NASDAQ in particular. So, it's a huge weighting there, the NDX. If Apple goes south, then everything else is going to go with it. And even though I'm not a classical guy anymore, I don't look at I look at neoclassical now. One is hard pressed not to see this as some sort of a head and shoulders type top, and you're starting to see these everywhere on the charts now if you're looking at the intermediate term time frame. Apple, yeah, it can trade up here, going into earnings into this month. A lot of these stocks can move back up some. But folks, as they move back up and they come up to do their bearish retest regenerates on these higher time frames, these places where they broke down, that's where they're going to have problems. And if Apple makes it up to there, that would kind of fill out the picture of all those people that want to draw it this way. That is today's short take.